What's going on, Project Option? Chris here, and in today's video, I'm going to fully break down a Tesla option and stock position that I have in my portfolios. I'm going to talk about how the recent 5-for-1 stock split affected the option positions in my Tesla position. I'm also going to share with you how I created a risk-free call vertical spread with $10,000 of profit potential and a little bit under 2 years for that to play out. And then I'm also going to talk about how I'm going to manage this position based on certain scenarios playing out in the future. So let's get started. So the first thing we're going to look at is just how Tesla has been performing recently, and it should be no surprise, but we have Tesla post-split at $484 per share today. And as we can see, Tesla has had just an absolutely crazy run up. Now, if you ask me, do I think this increase has been insane and overblown? The answer is probably yes. But I don't think that just because the stock has gone up so fast that that's a reason to bet against it and assume that it's going to fall just as quickly, because I just don't think that's the way the market works. There's a lot of positive and bullish sentiment around Tesla right now, and there is a lot of crazy speculation going on, including myself, as we'll see. But I don't think that just because the stock price has gone up so fast that it's going to crash even faster. But that is a scenario, and we'll talk about how I'm positioned for that possibility in just a moment. So the first thing I want to do is pull up the position that I have so we can see that I have 50 shares of Tesla, and this position is going to be static. I'm not going to change this at all. I'm planning on holding these shares long term for at least 5 years. And as you can see, the cost basis on these shares, $147 a share. The stock is at $484. So that's a really, really good cost basis on the shares, and I'm not really worried about Tesla cratering all the way back down to that level. So I'm pretty happy with that. So the first thing I want to point out and talk about is how the stock split affected the option positions that I have. So prior to the stock split, I had a 2,500, 3,000 call spread in Tesla in the September expiration that has 750 days to go. So now we can see that I have 5 options of each strike price, and the strike prices are actually divided by 5. So that 2,500 call actually turned into 500 calls, and the short 3,000 call turned into 600 short calls. So basically it works the same exact way as a stock split. When a stock does a split, the options will do the exact same thing that the stock does. So in this case, the shares outstanding increased by 5 for Tesla, and the share price was divided by 5. So the same thing happens with the options. The strike price of the options will be divided by 5, and the contract quantity that traders have in those options will be multiplied by 5. So if we go to the activity tab here, we can actually see the entry price or the fill of that spread that I was talking about. So we can see that on July 23rd, I purchased the 2,500, 3,000 call spread in Tesla. But if we look at the current position, we can see that it is now 5 call spreads of the 500 long strike and the 600 short strike. So this is another position that I'm just going to continue holding. Right now, it is up about $5,000 or $6,000, I believe, if we look at what it is right here. So right now it's saying that if I sold it at this current price, my profit would be $7,300. So basically, the first 2 positions we covered, the 50 shares, that's going to stay there. That's a long-term hold. And then I just walked through what happened to the call spread that I had that was initially 1 call spread, but now it is 5 call spreads at a lower strike price. Basically, the strike prices were divided by 5. The contract quantities were multiplied by 5. And this is how the options are affected through a 5-for-1 stock split. Now, going into this stock split, I knew that right when the stock split occurred, Tesla's share price would come way down, obviously, and with it, the options would also be much cheaper, because options on a $500 stock are far cheaper than options on a $2,500 stock or a $2,000 stock. So my plan initially, right when the stock split happened, was to purchase another long-term call option that was not a spread and purchase it pretty far out of the money. And that's obviously a very speculative play, but that's exactly what I did this morning. So what I did was I purchased the June call option. So this is the June 2022, and I purchased the 700 call option with 655 days to go. And I paid an entry price of $118, which means the option cost was $11,800. And this morning, obviously, Tesla had a massive surge just today. And with that, I was actually able to take the risk off of this position, or off of this call position. So I initially purchased the 700 call for $118. And then later in the morning, with the stock price increase, I was actually able to short the 800 strike call for $118. So since I paid $118 for the 700 call and I shorted the 800 call for $118, my entry cost for this call spread, which is 100 points wide, is 0. So I have no risk on this call spread whatsoever. If both of these calls expire worthless, I will lose $11,800 on the 700 call, but I will make $11,800 on the short 800 call. So I have absolutely no risk with this call spread, and it has 650 days to go. But since this spread is 100 points wide, that means it could be worth $10,000 if Tesla is above $800 per share after June expiration, or at June expiration in 655 days. So this is a risk-free position, and because of that, I'm not going to manage this at all. I'm just going to hold on to it and see what happens, because I don't have any risk whatsoever in that position. But now we're going to talk about risk reduction. So obviously I have a big open P&L on this, so it's up $26,000. Actually, I don't know if this is completely accurate, because some of the P&Ls are a little bit funky because of the stock split, but they will normalize. But this is the most profitable position that I have in the portfolio, but it is also the largest position. And knowing that the stock price has had this increase, and I am long-term bullish, but in the short term, understanding that there could be some severe pullbacks, especially when we have the U.S. election, I think that would be a very big catalyst for the market, depending on what happens. It could obviously be a positive catalyst, or it could be a negative catalyst. Time will tell. But I'm basically assuming that the U.S. election is going to be a catalyst. And sometime in between now and then, we could also see a market correction, just because the market has gone up so much. But I don't really like I don't like predicting that the market's going to crash just because it has gone up. But since Tesla is my largest position, and since I do have a large profit on it currently, what I did this morning was I purchased 2 of the 300 puts in the November 2020 expiration cycle. So these puts have 81 days to go, and I purchased 2 of them for $15.85 each, meaning I paid close to $1,600 for each of them. And since I bought 2, that means that they cost a total of $3,200. So my thinking with this is, if Tesla continues to go higher, my position overall has a positive delta, which means that as the stock price goes up, the position will continue to be more profitable as the stock price increases. But if we are to see a big decrease in Tesla, then these 300 puts will explode in value. And if we do get a really big drawdown in Tesla, then these 300 puts are going to explode. And basically, the way that I'm going to manage this is, if we get a really big drawdown in Tesla, whether it's Tesla specific or if it's caused by an overall market drawdown, then my plan is to actually close these put options and take profits on the put options, and then continue to size up again on the long side. So I am long biased on this Tesla position. I am bullish over the long term, but I am positioned to protect some of the losses, or protect some of the profits, I should say, if Tesla does decrease in the near term, and especially if we get a really big drawdown in Tesla, which, given its volatility, is certainly possible. But my plan is to essentially have these puts as protection, and if we do get a big drawdown in Tesla, I will look to sell these puts for a profit, which will effectively shelter some of the losses from the existing profits that I have. And then with the stock price now lower, it will be a better opportunity to start adding more long or bullish exposure to Tesla. So to wrap things up, obviously I have a very speculative option position, or option positions, in Tesla, and that's my decision. It's completely fine if you disagree with that. that's why we have markets. You can go ahead and take the other side of these trades and bet against me, and you'll make money if the stock price goes down, but you'll lose money if the stock price continues to go up. But as I said, I do think the Tesla move has been crazy, which is why I turned that call option into a risk-free position today, because I was not expecting another 10% increase in Tesla shares today, but I did have a plan of entering that long-term call option position immediately post-split, because the stock price being lower means that the option prices will also be lower compared to where they were when the stock price was at 2,000. So that is why I turned that call into a call spread and removed all of the risk from that position, while still allowing for $10,000 in profits to come in over the next 650 days. And then I do have another call spread that was affected post-split, meaning that the strike price was divided by 5, the contracts were multiplied by 5, but the actual position itself does not change in terms of profit potential or loss potential. And then I do have shares of Tesla that I'm not planning to sell. Those are going to be a long-term hold, and I'm just going to ride them out. But then, as of this morning, to reduce some of the risk in case we do have a short-term correction in Tesla, given that it has increased so much recently, and with the US election coming up in November, I think that could definitely be a market catalyst. In fact, I do think it will be a market catalyst. It just depends on whoever wins. That's going to determine what the reaction in the markets will be. So to protect against that in the near term, I purchased 2 of the 300 puts, and those have 81 days to go. And I paid a little over $3,000 for those puts, but that is not a speculative trade. That's a risk reduction trade. So basically, the way I'm approaching those is I'm thinking that I can pay $3,000. If those expire worthless, that's completely fine. But it gives me protection over the next 3 months. If the stock price does plummet for whatever reason, whether it's a broad market decrease or just a Tesla-specific decline in the shares, then those put options are going to explode in value, and I will look to either create a spread out of those puts and reduce all the risk in that hedge while still allowing for some downside protection, as I did with that call spread, or I will look to simply close those puts, take the profits from the puts, and then look to add more bullish exposure, as I am a long-term Tesla bull. So these are just my thoughts. This is not a recommendation to buy or sell any options in Tesla or to trade Tesla at all. And if you leave a comment down below and you ask for opinions on what you should do, unfortunately, I'm not going to give you any trading advice, because these are my decisions. You should do your research and make your own decisions. But as I said, these option positions are highly speculative, so I am understanding the risk that goes along with them. But again, that's why I reduced the risk completely in one of those positions, and I do have a share position which is not subject to the stock price path over a specific period of time as option positions are. So that stock position is a much safer position than these shorter term option positions, even though these option positions that I have, they mostly have over 600 days to go. So they are longer term option positions, but still, compared to buying shares of stock, they are much riskier. So be sure to do your own research, make your own decisions. But I just wanted to create a quick video to break down this Tesla position and do something real time and show you the real positions that I have, as opposed to doing solely the general educational stuff that I normally do on the channel. So once again, my name is Chris with Project Option. I hope you enjoyed this video. Leave a comment down below to let me know if you think Tesla is going up or down over the next 5 years, or maybe over the next year. I don't know. You pick a time frame and you tell me what's going to happen in Tesla. I'd love to hear your opinion.